Welcome back, guys. Welcome back to a new video. Today we keep talking about price action after seeing something about candlestick in the last video lesson. Today we are talking about patterns, so technical analysis, but we still talking about price action as well. First of all, what patterns are? Patterns are confirmations, lots of confirmations that the price makes on over all the markets, and that most of the time are all, I can guarantee you, they are all tradable. Why? Because all markets move in a similar way, always, because all markets are correlated each others. They are driven by algorithmics, by robots, okay, which insert liquidity at predetermined points, okay, because they are based on predetermined algorithms, okay. So knowing how to recognize these patterns means being in a more advantageous position than the market. Obviously, this is just another piece. This is just one more piece we need to add to be profitable every month. No, I won't say every day, but every month. But this always remains a difficult job, especially because it is the same market that always try to set continuous traps and manipulations. We will now see what are the most common patterns, how to read them, and how they can be traded. Finally, we will see one of it that, on my opinion, it is so much more frequent, and we will see how to fit it into a strategy. So let's start from a usual consideration that goes beyond every theory and graphic confirmation. We need to think about what we see, only what we see, because it will be so much easier. So we don't have to care trying to automatically recognize a confirmation. We always try to give a logical explanation to the graph without paying too much attention to geometric shapes. This is fundamental because the institutionals first know that there are standard graphic confirmation that all traders can read, so they can make us believe what they want, since they have a frighteningly higher liquidity that all of us put together. So just study what you see and try to have your personal consideration, your personal analysis. Okay, this is very, very, very important. So when we talk about patterns on the web, on the trading literature, you can find so many patterns, so many names. We have channels, rectangles, flags, pennants, triangles, etc., etc., etc. Like usually you can find everything free on YouTube, on the internet, so many tutorials, but I don't want to have so many theoretical confirmation, graphic confirmation, which I have to care. I just want to make everything so much easy. Okay, and on my personal opinion, what I always try to see is just a channel. Why the channel? Because it's absolutely one of the most frequent graph conformation of the market, of all the markets. Okay, as you can see, all the markets, now we are on S&P index 4-hour time frame, but all the markets are based, okay, on channel. Okay, let me draw this one, and we are going to see how can this could be helpful for our trading style. Okay, look at this, and inside every channel we can go to 5 minutes time frame, for example. Inside every channel, as you can see, there are others channel. A channel could be made not only by two parallel lines. Okay, so a channel can be also, let me remove this one, this. Okay, maybe this is the case. So can be also, can have also this shape, or this. Okay, or maybe this shape. This is a triangle. But what does this shape means? It means that there are so many sellers that the power, the strength of the sellers are much more bigger than the buyers. Okay, and so here the price make this movement. Okay, so continuous pressure from the sellers until price broke and goes up. Okay, so when I told you to try to read what you see and not be so focused on finding a specific graph confirmation, I mean this. Okay, I mean this kind of example. Try to understand what price you want to do. Okay, and in this case, for example, you will see a lot of spikes. Try to push from down to up. Okay, we will see some example. Another thing I want to show you is how to draw the trend line, because most of the traders do this thing. This one. Okay, so they are very careful to touch the higher highs, okay? But it is not the correct way to draw a trend line, because the trend line is this one. Okay, this is a correct trend line, because you need to try to touch most point as possible. Okay, and why this is important? Because these are all entries. Okay, when you see this kind of double formation, this is a double top. We're going to see this now. Okay, but this is some kind of manipulation. Okay, false breakout, and then price follows the trend line and keep on going down as the primary trend wants. Okay, same thing this one. Okay, if you take the white trend line, you will miss all these entries. Okay, so try to touch most points possible of the price. Okay, so why are channels so important? Because they show us how where the market is going, and so it shows a trend. Okay, and then as once a channel is broken, we can look for an entry. So in this case, as you can see, this is a correct way, okay, to draw the trend line. Okay, so if you see, I try to touch so many points. Okay, this is a trend line. It doesn't need to be perfect because we cannot entry at the perfect price, perfect level from which price will make a reaction. Okay, just we need to manage our entry price with the stop loss, with money management, etc, etc, etc. But in this case, if this one will be the channel, okay, we can consider to enter here, okay, for short. Okay, this will be this is only just an example. Okay, but so we have to look for a channel, just because first of all, it shows us a trend, and second, it gives us a possibility to entry in a trade. And this kind of movement is so frequent. It's very, very frequent. Okay, as you can see, if this is a channel, okay. Now don't waste time to waste your time to drawing exactly, but as you can see, here's a retest, and you can enter here. Okay, never, well, I can't say never, but I don't enter on the breakout. Okay, don't trade this one, but I wait for the retest, and then I enter here. Okay, sometimes price doesn't retest. Okay, channel. Anyway, doesn't matter. I will miss a chance to enter a trade, but I don't care, because this kind of confirmation are so frequent in all the markets. So I will take another chance. And this is example. Let me show you a very important thing. Don't buy high. Let me show you an example. Most of the traders, so if these are all supports, for example, resistance, sorry. So most of the traders buy here, okay, with the breakout. Okay, could be good, but I usually, as I told you, wait. Oh, sorry. I usually wait, sorry, for the retest. Okay, so I usually wait for the price to break, turn back on the supports, on the previous resistance that now became support, okay, and then here I go buy. Okay, don't be the trader who buys after a up move, when the up move is already occurred. Why? We are now 5 minutes time frame, it doesn't matter, but we can suppose this will be this is a daily time frame. This movement you will destroy your capital. You will be destroyed by this movement. If you get into the habit of buying high, you will be wiped out by a natural market correction, because this is a natural correction. Okay, then price keep on follow the mainly trend until it decide to change, like in this case. So in this case I will wait for the retest. I can go buy here, okay, but then market turn downtrend. Okay, our job is try to avoid this kind of mistakes. Okay, the most of the time. So don't buy high, and obviously don't sell low. For example, if now you will, let me remove drawings. If you now know that a downtrend occurred in the market, as you could know, because this could be a structure, this is a pin bar. Okay, we have to see on the past if this could be a demand supply area. Let me show you. Maybe not. Oh, maybe yes. Okay. So if you suppose that a downtrend is began, you have to look for a sell, okay, for a short, but you can't short here. You can't short here or here just because a breakdown, just because price have broken the support. Okay, wait, always wait for the retest here. Okay, if you cannot be able to wait from here. Okay, but broke down here, wait, you can tell here, this is the last breakout. Okay, wait, here, last breakout here, you can enter here, here as well. Okay, here you may understand that the price will change the trend. Why? Because here we have a structure, okay, in which we have this kind of candlestick. Okay, so patterns. The first one I want to speak with you is M formation or W formation. So M formation or W formation. Okay, let me draw better the M. Uptrend, then we have here a double top and price goes down. This is a neckline. Okay, this will be so much easier to see. Okay, where we can enter here on the retest. Okay, here, not here and not here, not here and not here and not here. We have to wait for the retest and then open a buy. So which is the ABC of M and W information. On the reality, it isn't so easy. Why? Because information, it is not always this, as with this perfect double top or double bottom in case of a W information. Okay, information could be this one as well, or could be this one. Okay, and this is the neckline. And if you see, there are so many cases. Okay, price always make this kind of formation. Okay, don't be confused. You don't have to think to double top or double bottom. They are the same graph signal, but they are two different concepts. Okay, but price always make this kind of formation. Okay, and in higher time frames you can see how useful this kind of formation could be for our trading, like this one. Look, this as information. Okay, this, oh sorry, this as well. This as well. Okay, they just are swings. They just are swings, and all markets are made by swings, by channels, by information. How do this kind of confirmation be useful for us? Because, as I told you, okay, with an information, well, this is a neckline. Price, I don't know when I don't know when, but we have the tools, we have the strategy to try to understand when price will retest the neckline. Okay, so we have two kind of trades here, because first of all, price will, as I told you, try to go up to test again the neckline, and then we have here another trade. Okay, this is what all the market, what price wanting to do every time that this kind of graph conformation will be presented, will be available. Okay, same thing for the W. Okay, so for example, we have this kind of pattern. Okay, price always and almost will always make this kind of movement. Okay, so trade from here and from here. So look here how many examples we have. This is information. Okay, price goes down and then backtest again the neckline. Okay, which is a support. Another example. Information and price test the previous support, and that goes to retest and break the neckline. Another example. Another example. This price goes down and then test the neckline again and make another information. Okay, this is a neckline, and that what we expect. We expect the price will retest again the neckline and then takes a decision up or down. Okay, same thing in case of double top and double bottom. I will be quick because I repeat, you will find these things on the internet. But double top, for example, one top, two top. So this, this is a resistance. Okay, this is a neckline. Okay, and what we see, if price now we go this on this direction, then we are looking for short here. Okay, so this is the breakout point, okay, on the neckline. Okay. And I'm pretty much sure that this neckline is a key level, okay, because price reacted so many times here. Okay, as you can see here, another example, or another maybe 2 or 3 examples. This is a double top, one top, two top, neckline, and price goes down, break, goes down, and then retest the neckline. Okay, what I want you to understand of this confirmation, of this kind of confirmation, is that a double top comes always after a uptrend. Okay, so first uptrend, sorry, double top and then downtrend. Okay, vice versa, downtrend, double top and uptrend. Okay, so when you see this kind of movement, this is not double top. Okay, double top is a clear, comes after clear uptrend. Okay, so this is a good example in which you have your channel or something like that. Okay, this could be a triangle. If you see, look how price react on this dynamic resistance. Okay, because this is dynamic resistance. When a trend line, when the price reacts so many times on a trend line, this is a dynamic resistance or support, as in this case. Okay, so this is double top, neckline and breakout. Okay, this maybe is another neckline with this double top, because follows an uptrend, then price break the support and then goes down. Okay, this is another pattern, head and shoulders. Look, maybe you already know, but shoulder 1, head and shoulder 2. Sorry, I'm with the mouse, it's not so comfortable. Okay, this is a neckline, same concept, uptrend, and then price once broke the support. Okay, you have to wait for the retest to enter a trade and go short. Okay, so this is the exact point for entry, not this one. Okay, but this. Okay, same thing in case of a downtrend. Okay, so this is a neckline, sorry, bad neckline. You have to wait for the retest and then enter here. Okay, as you can see in this case as well, the graph conformation are not so pure. Okay, so you will never see a double top like this. You will never see a head and shoulder like this, pure. Okay, but you will see something like this. Okay, why? Because we are on the market, and the market gives us always a lot of dirty. Okay, a lot of traps, a lot of manipulations, and so if institutional are able to hide patterns, we are sure that they will absolutely do. So the more you will train yourself, the quicker you will be to for the market to be predictable or more predictable to you. Okay, but you have to train a lot and try to understand what price will why price, not how price will go, because it's impossible, but why price is making a particular kind of movement. Okay, because at the end the market always make the same. It's only about time, but movements are always the same since a lot of time. Okay, we have first impulse, okay, then a part of consolidation, okay, and then impulse again, okay, then consolidation, okay, and then impulse again, consolidation, impulse again. Okay, so for example, if you know, if you train yourself to view correctly patterns and all the movings of the market, you will be so much easier, okay, to draw channel, okay, to understand that this is an impulse, okay, and if this is an impulse, this will be a consolidation, okay, and maybe a structure, okay. In fact, in the future, this structure will be a good point to enter a trade, okay. This is an impulse, okay. This is another impulse, but this maybe it's a news because it's a long candle made in just a few minutes, okay. So just a little bit of correction, okay. This is a very uptrend, very powerful, okay. Here we have another channel, okay. Here we have a breakout, so wait for the price to retest, and we retest here. But if you follow the structure, you will be long from here, so it will not good to go here for Excel. So just wait, okay. Here is a consolidation candle, and maybe this will be useful for us in the future because it's a doji or a pin bar, okay. This is a channel, so as I told you before, downtrend. Here we have consolidation and then impulse, downtrend, consolidation, impulse, uptrend, impulse, here consolidation, then downtrend, consolidation, uptrend, consolidation. What's next? This is a channel, okay. As you can see, price always makes the same thing, breaks the channel, retest. You can go short here, maybe this is stop loss, okay, doesn't matter, maybe not, depends where you have put your stop loss. In this case, my stop loss will be here and will be hit Okay, doesn't matter. This is a kind of manipulation. An institutional knows that we little people, little traders, put here our stop loss. Okay, it's a game. It's part of the game. Don't worry. The losses are part of the life trade. Let's move on. This is a channel. Okay. And this is fake breakout. This as well. This maybe 4-hour candles are not completed, so we have to wait just 1 hour more and see where price will be. If price candles close like this, maybe the price it will do again this movement. When price broke the high of this pin bar, we can go long. We want to be so much sure. We can wait for the retest. Okay, and then go long here. Let's move back. I will do this analysis for the first time with you, so it's new for me. As for you, this is a very big channel. Okay. Look here. Breakout test, and we can go short. Let's move very backward. Okay, this is analysis I already made before. Look at this. This is a channel. Break, retest, and go short. Okay, this could be the structure for this candle. Okay, and if you see, price reacted very good here. Maybe this is a structure as well, and price reacted very good here and here and here, then broke. Okay, this could turn this resistance could turn support just for a while, but then price break again, turn yet resistance again, and then it goes down. Okay, this is a channel. This is head and shoulder. Okay, this is a neckline, and price naturally goes down to test it and break it, and then the neckline became a support, and first it was resistance. Price broke it, goes down, turn support, and then up. This is a kind of movement that price, all the markets every day make, so nothing new. Okay. Oh, let me delete. Let me remove. This is double top, neckline, breakout, retested, and goes down. This is an impulse, so maybe this will be a good structure for the future. Okay, this is a very huge part of consolidation, okay, and could be useful for a trade in the future, and that's what exactly markets do. Same thing here, another consolidation, okay, and price in fact react. Okay, this is an impulse where impulse started. As you can see, perfect for us. This is just a preview of my strategy. Okay, this is a double bottom. Okay, the neckline is this one. Sorry, is this one, and price perfectly tested. Then I see a channel here. Okay, I saw a triangle before, but I didn't see it anymore. Doesn't matter. Okay, look how this support was, how this key level, price level was a fundamental, very important for the future, because price is always attract to this level and reacted from so many times. This is an impulse, correction, an impulse. Okay, so I suppose that this is a consolidation zone, a structured zone, from which price maybe will react in the future, but not yet, because price never meets this structure yet. Let me show you. This is information when price naturally tested neckline and then goes down. Okay, look at this. Seems quite easy, isn't it? But it's not. This is a channel. Price broke the channel, then retest here, and then goes down. Okay, this is a consolidation as well. Okay, as you can see, price reacted here, then goes down, then goes up and goes down again, react and react again, then broke. Okay, I like this kind of candlestick, this one, because make me think that can be a structure, this one, so it can be good for us to enter for a trade in the future. This is a channel. Okay, here price broke the channel, retest, we can enter here the trade. This is an information. This is an impulse. So this could be good for a structure, because this is a hammer pin bar, very good. In fact, price, well, not yet. We have to wait. Double top. Information. Okay. This is a neckline, and price, as you can see, react 1, 2, 3 times. Okay, this is an impulse, so this could be good structure with this candle for us to trade. Okay, in fact, perfect. Price reacted perfectly. Okay, after a channel. We just analyze I just analyzed all the SP index in the last 6 months. This is a channel. We can do like this. Okay. 1, 2, no, sorry. 3, 4, and then goes up here. Oh, sorry. Price goes up. Maybe double top. This is a huge M formation, so price goes down, and then I wait for the price to retest again this line. This is an impulse, a very, very huge impulse. So this is a good structure from which price in the future will absolutely react. Probably. Channel. Price broke, price broke the channel, retested, and then goes down. This is a very good candle from which price make an uptrend. Okay, so it could be very useful for us in the future to open a trade. In fact, price reacted here very good with another candle quite similar to this one. Okay, impulse, correction, impulse. This was a previous neckline, if you remember. So if you see, look how many times price reaction in this zone. Now we remove it, but this is an impulse, and so here it could be a good structure, even if it is not clear a candlestick. Okay, but anyway, let's take it for granted. Oh, look at this. This is an engulfing outside. Oh, sorry. Okay, because higher high and lower low of the previous to the previous candle. Okay, so I suppose that here price will react, because here there are lots of sellers. Okay, in fact, price react here so many times, try to break, it was not able to do it, and then goes down. Impulse, engulfing, same thing here. So this will be a good zone, a good structure from which price maybe react. Not so much here. It doesn't matter. This is formation. Price go up, break this resistance and then turn back to test the resistance that became support, then goes up. Channel, very long channel, this one. But as you can see, price reacted from the channel with a pin bar here. This is a doji, another time, pin bar, okay. And as you can see, price didn't go on the top trend line, okay. So it would be easy to suppose that will break down, okay. In fact, it will break down. We wait for the retest, then price didn't do, but anyway, price goes down. Impulse here. So this is a good structure. Let me see if we can do what we can do. Oh, this is a channel, perfect channel as well. Price broke, retest here, broke, and then goes down and goes down again. Retest here, this is an formation, and price got to retest the previous support, became a resistance, and then goes down. Here is a good candlestick from which, if we take a trade from here to here and with 1-1 risk reward, you can see here it was completed. Okay, same thing here. Oh, sorry, same thing here. Oh, here we have maybe a structure. Oh, let's see this one. As you can see, price reacted, then breakout, fake breakout, and then goes up again. Okay, this is always valid as a structure because here there is another pin bar. Okay, so let me see for the future if it will be useful. This is an engulfing as well, so very useful for us. I don't know what this line now means, but as you can see, key level. Okay, and look at this. This is a structure area for sure as well. Channel. 0, 1, 2, 3, and then price goes down, broke the channel, retested, and then goes down again. Okay, and this could be a valid entry for sure, because here we have an engulfing. So it is meaning that here sellers are very, very powerful. Dodgy. So this is a good structure area. This will be a stop loss maybe. But as you can see, we have triple top. 1, 2, 3, maybe 4, maybe 5. Okay, so price tried to broke this area, but it was not able, and so broke down the structure and retest here again. Then goes down. Okay, here we have a pin bar. Sorry. Here we have a pin bar. So this is structure before an impulse. So this is a very good entry, etc, etc, etc. Okay. So as you can see, read the market is difficult, okay, but is not so difficult if you two things. One, you train a lot to try to highlight all the patterns, all the structure of the price. Two, you have to be absolutely clean, psychological clean. I mean, don't be conditioned, okay, psychologically. You have to be as a robot, as a computer. You have to focus only on the graph. Okay, this is very, very, very important, because as you probably know, the 50% of your profitability on your trading activity will depend on psychological determination, psychological attitude. Okay, so this is very, very important.